Hi, welcome to Curious Bricks. Today we're going to talk about Snowflake, ticker symbol SNOW, Q4 2021 earnings report. The earnings call was hosted on March 3rd, 2021. Before we dive into the financial details, let's take a quick look at some key statistics. As of March 5th, 2020, Snowflake share price is $239 and its market cap stands at $67 billion. Neither the trailing price-earning ratio nor dividend yield is available, as Snowflake still reports operating loss and it currently does not pay out any dividends. As of February 12th, the short interest ratio is 16% of total floating shares. Now let's take a look at their latest quarterly financials. We will start with the income statement. In Q4, Snowflake reported total revenue of $190.5 million, which is 117% higher than the same quarter last year. Non-GAAP-based gross margin was 64%, while product gross margin was 70%. Total operating expenses was reported at $308 million, which is 123% higher than the same quarter last year. This is primarily driven by large stock-based compensation awarded in the quarter. Overall, Snowflake reported total operating loss of $200 million. Snowflake also published some relevant details in their filings. Looking at the revenue by geographic market, we continue to see strong growth coming from both US and overseas markets in this quarter. In addition, Snowflake reported impressive growth on RPO, which now stands at $1.3 billion. The management expects to recognize 50% of the total RPO in fiscal year 2022. Customer count, net revenue retention rate, and customers with trailing 12 months product revenue exceeding $1 million all showed solid result. Now moving to the balance sheet. Snowflake decreased its cash on hand and short-term investments from Q3 to a total of $3.9 billion in Q4. Meanwhile, Snowflake does not carry any long-term debt. In short, the company has strong liquidity. During the call, the management announced that BlackRock, the world's largest asset manager, adopted Snowflake Data Cloud and launched Aladdin Data Cloud. The company also announced they have added 19 new Fortune 500 customers in Q4. Snowflake Marketplace also made progress. Data consumption was up 48% quarter over quarter. New listings grew 10 times year over year to a total of 380. A few new data providers were also added. Snowflake Ventures made several investments, including DataRobot, Hunters, and Lacework. The latter two specialize in cloud security services. Lastly, moving to the fiscal year 2022 guidance, Q1 revenue is expected to be around $195 to $200 million, or year-over-year growth of 92 to 96%. Operating loss is expected to be negative 23%. Full-year revenue is guided at $1 to $1.02 billion, which reflects year-over-year growth of 81 to 84%. Non-GAAP gross margin is going to be around 71%. Operating loss to be negative 19%. During the Q&A session, several analysts showed interest in learning how Snowflake views the competitive landscape with legacy providers and how big will Snowflake get to. The management responded there was no change in terms of comparison of legacy providers. The competition is always moving off legacy platform and very focused on public clouds. In fact, the management thinks Snowflake's competitive position is gradually strengthening because Snowflake is seeing public cloud vendors having significant struggles of migrating successfully off of those legacy platforms. Although Teradata delivered some good result in their recent quarter, Snowflake learned from customers that migrate from Teradata to Snowflake. They now spend half the money and do 10 times the amount of work. There's no operational limit on Snowflake. Some customers have told Snowflake that they are the second largest line item in their budget behind the public clouds. One analyst was interested in learning Snowflake's view of net retention going forward. The management expects net retention remain high, north of 160% in fiscal year 2022. In terms of average deal size landing, that is not changing that much. It takes customers, especially if doing legacy migration, 6+ months before Snowflake starts to recognize any revenue. Customers usually do very little in the first 6 months but consumes the entire contract in the remaining 6 months. When they do a renewal, that's when most customers do multi-year renewals. Among the 19 Fortune 500 customers landed in Q4, Snowflake recognized virtually no revenue on those customers. Lastly, analysts were interested in knowing what drove the strong RPO growth in Q4. First is seasonality. Salespeople try to maximize their acceleration in Q4. Secondly, the company grew the size of the sales rep to pursue new businesses. Then the strategy of pursuing larger customers also pays off. It is not just the new customers, but also existing large customers with big renewals. Now let's take a look at Snowflake's stock performance before and after the earnings call. Snowflake reported quarterly revenue of $190.5 million, beat analyst expectation of $178.5 million, but its adjusted EPS of 70 cents loss meets the consensus of 17 cents loss. On the following trading day, the market had negative reaction after the earnings release. Lastly, here's the latest summary of analyst ratings of the company. As of February, we see more than half of the analysts gave the rating of hold, with a few ratings of buy. If you are interested in knowing more about this company, I recommend you conduct further analysis of the company's public filings. Thank you for watching this video. If you like this video, please subscribe to our channel.